When you sign a margin agreement with your stockbroker, it says that the stock you buy can be loaned to somebody else. So let's say I want to go short. I call my broker up and I say, I want to sell 10 shares of, but I don't have 10 shares of Motorola. So he borrows it from somebody else and he sells it. Motorola goes down. Now I've got to come up with those shares. Motorola goes to 5. So I buy the stock at 5, replace it for the ones I borrowed, and the other 5 goes in my pocket, selling short. The risk in selling short is Motorola doesn't go down. Motorola goes up. Now I've got to go out and buy those shares at whatever Motorola, so I can have a, they say unlimited loss. Well, I don't think Motorola is going to go to $1 million a share, but I put a stop in, or I put a buy order in at a certain point. So I can limit myself. Remember, those stop orders, those buy orders become market orders. You don't necessarily get that price. Another reason to go short, what we call short against the box. You own Motorola, but you don't want to sell it. You've got a big profit in it. You want to delay your profit, your capital gains, until next year. So you short Motorola in November, and then in December you deliver the share. In January or February you deliver those shares that you had in the box for what you went short. That way you don't have the capital gain until the next year. So 2 reasons for going short. One is making money. The other is delaying your capital gain. Now we're going to look at in a bar chart, we're going to look at a pattern called a head and shoulders. Now notice this is also the futures market. Price has gone down, then it's sort of leveled off a little bit, then it's gone down again, leveled off a little bit, and then it's gone up again, and it forms what we call a neckline. When it breaks the neckline on a head and shoulders like this, where the head is down, the stock breaks it, then the stock, in this case the commodity, is going up. So you'd have a buy signal here. So when you see this pattern called head and shoulders, you know when to buy. Now here's another example of a head and shoulders, but notice that the head is at the other end and the neck is here. Here the stock went up, went back down, the head back down, back to a shoulder and down, broke the neckline, and it's on its way down. Called the head and shoulders. I'm not going to give you, there's just tons of patterns, but I'm going to give you the most basic ones so you could make a decision. Now let's see. Here's the test. Let's see how you do. Should stock be bought or sold? Just by looking at this pattern, what can you tell me? What do we have here? Take a second to look at it. I hear one person wants to sell. Does everybody want to sell?
Looks like a buy to me. Buy.
Okay. It's a buy. Why is it a buy? Okay. Here's a head and shoulders pattern. Here's a trend. And we've got increased volume. So it's a buy. There's a trend line.
Volume declining.
Yeah, it was declining. But it was still higher than the whole time here, right? Went up, spiked here, went back down, went back up, but it was higher throughout the trading of the stock here.
At exactly what point do you know it's a buy?
Well, if I saw it here, I mean, I would have been a buyer probably around here, because this is a reverse head and shoulders here, and it went down, and then it came back up. But just based on the trend line and the volume, I would have been a buyer. And the point you asked me is I would have been early with the reversal of the downtrend. Now, on a point and figure chart, it's a lot easier to see because you'll see this when we get to it, that the picture is a lot clearer. Because this, if you were just doing head and shoulders, once it broke the neckline, you might have thought about going short and you would have been caught. Another test. Should this stock be bought or sold? First of all, it's a sell. The reason it should be sold is it broke its support, for one reason. It's also got a triple top, which we haven't really discussed, but there's a top here, and a top here. Triple tops are not as in favor as they used to be. Double tops and triple tops are about given the same weight. But it was supported at 10, and then it broke the 10 support. Now where's it going to go? It's going to go down. Now, do I know what company this is? Do I know what they sell? Do I know anything about them? No. All I know is that the stock is going to go down. And I don't want to hear from anybody else about what they sold, what they're going to do, because I'll see it in the price chart when that happens. Supply and demand. Talk about point and figure charts. It's a 100-year-old system. It always works. But it works well sometimes and not great sometimes and other times. But mostly, you'll be profitable, and we'll talk about how to protect yourself. We're going to show you when to buy, when to sell, and when to determine how much profit to take. Price is determined by demand. Point and figure charts tell you about supply and demand. On November 25th, this is what the Dow Jones Industrial Average is doing. Charles Dow put together a system, and if it's used properly, that's another good method of determining the price. So we've had an uptrend, breaking all kinds of records, making everybody nervous. When's the market going to break? What's been? A very famous man was asked, "Why are you so successful in the stock market?" And he said, "I never sell at the high or buy at the low. Always leave something for somebody else. The people that get hurt in the market are those people that hang on too long because they want more money, greed. Greed is good according to the movie on the stock market. And the people that wait too long to buy. Take your profits and run. This system will tell you when the market is going to break. It did in '87. This is a typical bar chart. But what have we learned so far? We've learned that this is a trend. The market is up. And on this one, all we've done is draw a trend line, which you would draw on your own charts. And then when a new trend is established, another trend line. Now, this is the S&P. Notice this is a point and figure chart. How much easier this is to visualize than the other chart. The X's mean the price is going up. The O's mean the price is going down. And here we have a trend. All right, in a bull market, a double top